What's happening, good people? We're here from Macro Dirt Podcast number 15. What's going on, J Diddy?
What's up, pickle puss?
That's a good one. I like that. What's up? Well, we've got Israel and Iran bombing the snot out of each other with American-made weaponry. We've got a massive Hurricane Helene damage in North Carolina, no help from the U.S. Gov. We got commodities exploding higher against the backdrop of a longshoreman strike. Man, what's not going on?
It's a big week. I think in a couple of weeks, I was reading something before I came on. There was a quote from the former Prime Minister of Israel who said that um, I can't remember the exact quote, but something about there's going to be economic retribution. They're going to cause economic damage to Iran, which means one thing to me: they're going to go after the refineries.
Oil refineries, exactly.
Yeah. Yep.
Well, I mean, it looks like that's at least getting filtered into the price a little bit. I mean, oil's bounced from 65 to 73, sort of in a straight line. What's kind of discouraging about it is that $73 isn't much risk premium to me. If there's bombs flying around, you know what I mean, and refineries are at risk and things like that. I think it may have something to do, and I could be wrong, with the Saudis getting extremely irritated at all of the quota busting.
Yes.
You know, it sounds like a lot of the OPEC countries are probably selling more outside the quota. And Prince Abdulaziz just came out and said, look, if you guys are going to do that, you run the risk of this thing cratering to 50. I think that his messaging is like, we'll pull the fucking bottom out of the thing if you're going to sell more than you're allowed to sell.
Right? Yeah, and Javier Blas, who is a Bloomberg opinion columnist, I used to work with him at Bloomberg, and he was writing about that today. Like, he was talking about 50 is the number you should be looking at for oil rather than 100. But when I look at I'm a chart guy, right?
Yeah.
It's double bottom on the chart. It is a DeMarc 13 buy. We have had two impulsive moves off the low. We have rejected off of 65 two times. Look, if you don't want to be long, just buy calls.
Yeah.
Like seriously.
Totally fair.
If you're wrong, the premium gets vaporized, you try again, but like that's the way to play it.
I agree. I mean, the market's in its normal slightly backwardated phase, and you're getting paid to be long. So be long and earn the carry. For me, I understand your option play. For me, if I'm long, I can kind of try to stay long against the lows, earn the carry, and see if I can survive a couple of months. And that seems like a reasonable strategy to me. It's just that it's been difficult where for the first time in a while, have we seen nat gas bid only, gold, copper bid only, silver bid only, PGMs bid only, and all of a sudden oil just can't get out of this hole. That's very odd dynamic for the commodities markets.
Yeah.
What's an interesting thing to me is that from 30,000 feet up, JD, you can tell me if you agree. I'm looking at the gold oil trade, and I'm just looking at them as two separate commodities. And similarly to that being like an anomaly where oil isn't rallying or responding to any commodity strength, we're at the lows in oil, everyone's short as shit. We're at the highs in gold, and it's getting a little more popular, and there's probably some length out there. I feel like over time, like if we probably put out a gold short against an oil long down here, that's probably a home run trade.
Yeah, I mean, I have some thoughts on gold. So
let's hear them.
Like from a technical standpoint, gold is trending, right?
Yeah.
Like the gold has ripped through like 3 DeMarc 13 cells and is just not stopping, So it hit one a couple of days ago and it traded off a little bit. Gold, I think the payroll number on Friday could be a catalyst one way or another. Like I'm long, I've been long for 19 years, but I'm still long. Yeah. And ADP came in today about 20,000 jobs higher than expected. If we get a payroll print of 160, 170, 180, that's a risk for gold. But really, I'm focused on bonds. I want to change the subject for a second.
Go, please.
At the Grant's conference, James Grant's conference in New York, he had Stan Druckenmiller speaking. Druckenmiller said that we have bipartisan fiscal recklessness. No matter who gets elected, it's going to be massive issuance in the bond market. He is 15 to 20% of his portfolio short. And he said that George Soros would make fun of him for not being short more. Like he has that much conviction on it. He is short bonds.
Wow. I mean, it plays right into your scenario where, commodities are going to go higher for a long time. That's going to make its way into headline inflation. And then you're right back to that 2022 market where all you have is downside risk in the bond market and risk of a gap lower in bonds because CPI was expected 4% and it came out 4.8. Right. And the bottom falls out of the treasury market. So I don't disagree with that scenario. I don't have any treasury position on right now, but if I was going to put one on, I'd go with you and Druck. That's for sure.
Yeah. Yeah.
Yeah. I think that's great. Did he say anything about the commodity space by any chance? Obviously, that's probably why he's short bonds, though, right? Like that's got to be his line of thinking. Yeah. Goldman Sachs raised the price target in gold from 2,700 to 2,900.
Is that year-end price target?
For 2025, they said.
For 2025?
And I think they said for early 2025 as a little bit of a nuance. So I think that they're just on the gold is trending trade. I mean, that's kind of the trend that I've been on with gold, so I can stick with it.
Well, gold got to 2685. It almost got to 2700,
Yeah, no, that's true. And if you look at it, silver is still really lagging badly because, I mean, silver is the same price that it's been since gold was 2,300.
Silver is the same thing. Just buy calls.
Yeah, that could work. Buy calls and roll them out. I just wanted to look at the chart to see exactly what we were dealing with in silver. Yeah, because it's still a $32 per ounce item. And like I said, we ran up to $32 the first time when gold went through 1,800. Now gold's 2,700 and silver's $32. And and I just wanted to vet this out a little bit because I almost got out of breath. I had a podcast with the Contrarian Investor, and they're a great group over there. And I'm talking with the host, and he's saying, "Do you think silver is eventually going to catch up to gold?" And I'm like, "No, I don't see them as the same exact trade. I feel like gold is really reacting to the flagrant spending and debt levels and things like that. And silver has become more of an industrial commodity to me because it's such a huge part of solar panels and this and that. And it's just a little bit less of a precious metal."
I think you're right.
Yeah. And he was, and the thing was that I was getting the mindset from him. He was like, "Why shouldn't silver catch up to gold?" And I'm like, "Why should apples catch up to oranges? It's not the same fucking trade, dude." And I didn't get contentious with him. But in my head, I'm like, what are we talking about here? Like, these are two different commodities. They don't necessarily, just because we call them precious metals doesn't mean they have to trade in tandem. And if you want to draw up the chart, gold took off like a bat out of hell and left silver in the dust. What do you want to talk about?
The one thing I'll say for silver is a right tail asset. Okay. Silver explodes higher. It did in 1980. It did in 2011, both up to $50. The next time it explodes higher, it's going to be to $100. Silver has a big fat right tail. You always want to own the upside in silver. And if you can get cheap upside, you have to own it.
That's fair. I don't disagree with that. I mean, those are lottery tickets I wouldn't mind having because that's what silver does.
You can do call spreads. You can do like the 35-40 call spread, the 35-45 call spread, something like that.
That's reasonable. That's totally reasonable. What do you think about, first of all, nickel just took off again. If you're watching the chart, nickel started roaring. Copper's at 10K. What are the base metals responding to now, in your opinion? Because the dollar's rallying in this sort of
I think it's responding to war. I just pulled up the aluminum chart before I came on. Aluminum looks really, really good. So
why does it look good? Because when we were begging people to hold on to their commodity risk, aluminum was triple pounding the 200-day moving average support level, right? And made it out of that alive. And that was what we were talking about. When you get confidence that your position held in, you got to change the size and aggression level of your position, right? That's part of that.
I think aluminum is just starting the trend. I haven't looked at a nickel chart, tin, anything else, but
they all look good. And even base metals, have kind of dragged lower and are trading higher. Look at steel stocks. Look at things like Cleveland Cliffs. Like the stock collapsed from $20 to $13 and is now finally breaking the steepest downtrend. It's breaking the 50-day. I'm like looking at that chart and salivating.
I gotta take a look at that one.
Yeah, the steel space is one of those other spaces like silver where you'll just wake up and those things will be on a 5-day dot shot to another price. That stuff's really important. What else are we missing in the markets, JD? Is there anything we need to be talking about?
I don't think. I mean, if you want to move on, that's fine. Like stocks are super boring right now. I mean, I think there's tail risk around a war.
Yeah.
I think if Israel bombs Iran's refineries or bombs Tehran or something like that, like I think we walk in and we're down 3%.
Yeah.
I don't want to be short that tail for sure. This is the wrong time to be selling puts and stocks. Let's put it that way.
Yeah, I agree. I agree with that. Yes, that's a good call. I think it's important to notice also that we're talking about here that the commodity rally has caught hold. And you said something that I absolutely loved so much in a dirt nap yesterday that I tweeted it out, where you were like, people are doing what's been working. They're buying tech and they're short commodities. And one of these days, they're going to get their heads blown clean off. Right? That is beautiful rhetoric, wordsmithing, whatever it is right to the fucking point.
Yeah.
Because, and if you look at the rotation yesterday, just to get a glimpse of the shades of it that it's starting to kind of illustrate for us in the next iteration of this market painting. What was at the top of the leaderboard yesterday? Oil services, E&P, natural resources, metals and mining, gold miners, all in positive territory. What was down over 2% yesterday? Semiconductors, software,
Nvidia.
internet stocks, cloud computing. You know what I
Yep.
mean? It's that rotation all over again right before your face. And what does that generally mean for the S&P?
Yeah, and by the way, there are tens or hundreds of billions of dollars that are wrong way on these factors, right? That are underweight resources and long tech and discretionary. I mean, hundreds of billions of dollars. When the fire starts in that theater and people try to go out the exit, I mean, it's going to be like thousands of basis points of outperformance
and thousands of dead bodies left in the
Yeah.
theater because they're not all going to get out. It's just, there's no way. And you can smell, like you said, like, don't let your commodity length out too early. The guys that need them haven't come after them to buy them yet, right?
Yeah.
They're still over a barrel with the gimp ball in their mouth going, I wonder if this is going to stop anytime soon or else I'm wrong. Right? That's where they are. And eventually the price is going to change to a point where they're like, okay, get the gimp ball out, get the position off, buy the commodities, fucking get rid of the technology, and I can't take it anymore.
Yeah.
I think we're getting closer. Yep. All right. I think we've solidified our views on the markets, and I don't like to just blow hot air into our podcast to blow hot air. So let's go off markets. There's been a lot of stuff going on, man. How about all the people that have passed away in the last week? We lost Dikembe Mutombo.
Oh, he passed away?
He passed away.
No way. How old was he?
58 years old from cancer.
I didn't know that. He was in a commercial recently with the finger, right?
Yeah, good commercial. And the famous Dikembe story, one of them is he's the guy that Michael kind of called out when Michael sunk his free throw with his eyes closed.
Yes, that's right. Yeah.
Dikembe was talking shit, and they got him on tape going, "Hey, Dikembe, you want to keep talking shit?" Because nobody was better than Michael Jordan, right? And so what I want to hear, that leads us right into the conversation that I wanted to have, because this is fun. I love talking about GOATs, greatest of all times, right? Michael Jordan, there's nothing to talk about in basketball. In my opinion, Tom Brady in football, and there's nothing to talk about.
Yep.
Wayne Gretzky in hockey, doubt there's much to talk about, right? Skateboarding, Tony Hawk, surfing, Kelly Slater, throw it in there. Baseball, it's Pete Rose, man.
Yeah.
It's Pete Rose by a flipping mile, man.
Yep.
You want to hear a great Pete Rose quote? I would walk through hell in a gasoline suit just to play baseball. How much grit is in that fucking statement, right?
Nobody played the game like him. I texted you before we came on. I said Gleyber Torres is the opposite of Pete Rose.
He's one divided by Pete Rose.
I know.
Right? He's loafing all over the field. He's getting one hit out of four, and he's like, I had a pretty good night. What? I singled to third. I singled in the third. I'm fine. You know what I mean? Where Pete Rose, Joe Morgan said about Pete Rose, when he got his first hit, he went up to bat looking for his second hit. When he got his second, he went up to bat expecting his third. After his third, he knew he was getting the fourth hit.
Yeah.
And God forbid he get up 5 times. There was no way in Pete Rose's mind that they were getting him out the 5th time.
Yep.
You know what I mean? It's like the mental opposite of how baseball actually works, right? It's a game of averages.
So I don't know if you know this. This is very funny. So they had him in the broadcast booth in Cincinnati a couple years ago, right? And Pete Rose did not give a fuck about anything. So he's in the broadcast booth and he's calling the game, and the pitcher pitches a pitch, and he's like, cockeye fastball right down the middle. Right on TV, they're like, "Oh, you can't say that." He's like, "What? Cockeye fastball?"
Right, right. He's like, dude, I'm a ball player, right? You can take the ball player out of the guy. You can't. I mean, you can take the guy out of the ball player. You ain't taking the ball player out of the guy. What I love, let me show my age for a minute, because I was a huge, like little league baseball player as a single digit kid, and I was tuned into baseball in '75 and '76 when they not tuned in directly, but like through the family and all the buzz, and it was on the TV. But you got to remember, Pete Rose moved from outfield to third base right before the 1975 season to make room for George Foster in the lineup.
Yep.
Right. They wanted another slugger from the outfield in the lineup. Sparky Anderson got him to move because he said, listen, this is for the good of the team. And Pete Rose made the move. Right. So he went from outfield to third base in 75, wound up winning the 1975 World Series MVP at third base, had a 7-game baller season a baller series against the Red Sox, got 10 hits, batted .370, won Sports Illustrated Sportsman of the Year for changing positions, right? They come back next year, 76, they swept the Phillies in the American League Championship Series, and then they swept the Yankees in 4. And that was the end of that postseason. Yep. So he was on the only undefeated team in the history of Major League Baseball. That's a pretty sick accolade to go along with all of your other sick accolades, like the 3 World Series championships, the MVP, the 1973 National League MVP, 17 All-Star games, 2-time Gold Glove outfielder, 3 NL batting titles, and more hits than anyone in Major League Baseball history with 4,256. And that's a record that I hope he carries, on ad infinitum, and he should have been in the Hall of Fame on the first ballot.
Yep. Yeah, especially, I don't want to get into the whole gambling thing, but pro sports is going to have an epic gambling scandal at some point, which is going to dwarf Pete Rose. These guys are betting on their phones. It's happening, like for sure.
Well, so. Yeah, it's so ubiquitous now that, like the funny tweets that were getting to me yesterday was that, all the people talking about Pete Rose not getting into the Hall of Fame, all those sports channels, they're all supported by DraftKings and gambling websites.
Yep.
You know what I mean? So Pete Rose is officially going to be the poor guy sitting in jail doing time for selling weed on the corner in the age when weed is legal and available in the goddamn 7-Eleven.
Yep. Hey, that's exactly right.
Yeah, so
by the way, George Foster was the only baseball player to hit 50 or more home runs in the 70s.
Is that right?
Yeah, he hit 52 home runs in, I think, 1972.
Not even like Mike Schmidt or Greg Luzinski had that many?
The only one in the 70s.
Yeah, he was badass. Yeah. That team was ferocious as could be, man, that Big Red Machine team. And might have been, I mean, you can make the case that with postseason sweep that they were the best team in baseball history.
Yeah.
So it's kind of tough to argue that. What else off topic have we got, JD? Anything fun for the gang?
Gosh. Well, I mean, I hate to bring this up again, but Jesus.
Oh, yeah. Get the boot. Yeah. You know what? I have to officially order my short stack, and I'm going to do it today. I've had a couple of birthday gifts that I want to give that out for, and I've got just enough time to get them on the tape today. So I am going to take an actionable item and order a short stack of night moves today, and I can't wait to get through the stories that I haven't read yet.
If you read it quick, we can talk about it next week.
Yeah, I'll zip through it. That sounds good.
Yeah,
sounds good, man. That's the story, man. So we're going to stick, to come full circle, we are sticking with our commodity view that we are in the early innings of
I just want to reiterate something here about commodities.
Let's go.
We are not perma bulls here. We are not perma anything. It may seem like we're perma bulls because we got bullish around the time that we started the podcast. When it's time to get flat, we will get flat. When it's time to get short, we will get short. The trend is working. We are sticking with it. Right. But we are not perma bulls in any asset class. Perma bulls or perma bears. Right.
I could reach through the camera and kiss you, because I think everybody that reads our newsletters knows that we've been long stocks, long bonds, short bonds, long oil, the whole thing. We are trade mercenaries looking for the right place for our money at all times. And if it's long commodities today, it might be limit short tomorrow.
Yep.
Because we're traders and that's how the game works. But we are married to nothing in this trading world. So that's a great point to close on. We are totally trading agnostic, looking for the next one. And right now we're in the early innings of this hard asset trade. And man, for whatever reason, I know it's going to suck because I got to go buy toilet paper and paper towels now. But against the backdrop of a longshoreman strike and potentially thinner shelves at the grocery market, you do not want to be short commodities on the board.
You do not want to be long bonds either.
Yeah, exactly. Same exact trade.
Yep.
So there's a great position of strength to close on, everybody. Thank you for listening to podcast number 15. Hasta la vagina, good people.
Hasta la vagina.